All right, let's talk about investing. If you've ever felt that it's just too complicated or maybe too risky or something that's only for people with a lot of money, then this is for you. Today, we are going to break it all down, step by step, and show you how literally anyone can go from knowing nothing to making their very first investment. Ready? Let's dive in. Okay, so first things first, let me ask you a question. Think about your savings account for a second. It feels safe, doesn't it? I mean, the number in there only ever goes up when you add to it. But what if I told you that by playing it safe, you are absolutely 100% guaranteed to be losing money every single day? It sounds crazy, I know, but it's true. And it all comes down to this one powerful, invisible force that's working against you. And that force is called inflation. You've heard the word, but what does it actually mean? Well, put simply, inflation is just the reason that stuff gets more expensive over time. It's kind of like a silent thief that is constantly eating away at the value, the buying power, of the money you've worked so hard to save. So while the number of dollars in your account might stay the same, what you can actually do with those dollars is shrinking day by day. Let's make this really, really clear. Imagine you've managed to save up $1,000. And hey, that's a fantastic achievement. With that $1,000, you could walk into a store today and buy yourself a brand new MacBook Air. It feels good, right? Your money has a real, tangible value you can hold in your hands. Okay, now let's hit the fast forward button and jump ahead just a couple of years. Because of inflation, that exact same MacBook Air, not a better one, the same one, now costs $1,200. Your original $1,000, which has been sitting there safely in your savings account, can't buy it anymore. You didn't spend a single cent, but you effectively became poorer. This right here is the fundamental problem that investing is built to solve. So, how in the world do we fight back against the silent thief? Well, that brings us to a huge choice that everyone has to make with their money. Let's really dig into the difference between just saving your money and actually making it grow. Now take a look at this, because this right here, it kind of flips the whole idea of risk completely on its head. We're taught that saving is safe, and sure, the number of dollars you have won't go down, but as we just saw, its value is guaranteed to go down. That's why saving is really only good for short-term goals, like saving for a vacation next summer. Investing, on the other hand, its whole purpose is to grow your money faster than inflation. Yes, there's more short-term risk, but for your big, long-term goals, like retirement, it's the only way to actually win the game. Okay, so let's say you're on board. You're thinking, I get it, I need to invest. But the moment you make that decision, bam, you get hit with this absolute tidal wave of confusing options and financial jargon. Honestly, it can feel overwhelming, and that's almost by design. But don't worry, we're about to cut right through all of that noise. This is what you see. I like to call it the wall of confusion. You've got stocks, crypto, real estate, NFTs, and there's a guru on every corner of the internet shouting that their thing is the one that's going to make you rich tomorrow. It's so much, so fast, that it paralyzes most beginners. And what do? Nothing. They just stay in their savings account, which we now know is the worst possible choice. But here's the secret. Are you ready? You don't need to understand any of this to get started. Seriously. You don't have to become an expert stock picker. You don't need to predict the next crypto boom. To start investing the smart way, you only need to understand one simple, powerful idea. And that one big idea is the index fund. Forget about trying to find the one winning needle in a giant haystack of companies. An index fund is a way to just buy the entire haystack. Think of it like a shopping basket. With one single click, one single purchase, you buy a basket that's pre-filled with tiny little pieces of hundreds, sometimes thousands, of the biggest and best companies. It's instant diversification, it's simplicity. So let's look at the most famous example in the world, an S&P 500 index fund. This shows you exactly how it works. Let's say you invest just $100 into this fund. You're not just betting on one company to succeed. No, your $100 is automatically split up. About $6.40 of it goes to Apple, $5.40 goes to Microsoft, $3.10 to Amazon, and so on, all the way down the list of the 500 biggest companies in America. You instantly own a small piece of the entire U.S. economy. Now, I can practically hear what you're thinking. Okay, this sounds simple, maybe a little too simple. Is it actually safe? What about a market crash? What about losing all my money? That is the number one fear every new investor has, and it is a good question. So let's tackle it head on right now.
Look, don't just take my word for it. This isn't some crazy new strategy I cooked up. This is a direct quote from Warren Buffett, who is, only the most successful and respected investor of all time. His advice for his own family, for his friends, for you, is not to try and be clever and pick stocks. It's to simply buy a broad index fund and get out of the way. You see, the really smart money isn't about wild gambles. It's about patience and playing the long game.
But still, there's that voice in the back of your head, right? It's the question that keeps millions of people hiding their money in savings accounts. And it's a completely valid fear. We have all seen those terrifying headlines, the news reports with the scary red charts going down, down, down. Market crashes are real. They happen. But understanding them is the key to making sure fear doesn't ruin your financial future. Let's just tell the story of the last huge crash, 2008, the global financial crisis. The market fell off a cliff. Now, a lot of people panicked. They sold everything in early 2009, right at the bottom. By selling, they turned a temporary drop on their screen into a real, permanent loss of money. But what about the people who did nothing, who just held on? Well, by 2012, the market was already back to where it started. And today, it's way, way higher. The most important lesson in all of investing is right here. You only truly lose if you panic and sell. So why? Why does the market always seem to recover and push higher over the long term? It's not magic. It's actually something really simple and kind of beautiful when you think about it. It's because when you buy an index fund, you aren't just betting on numbers on a screen. You're betting on people. You're betting on human ingenuity. You're betting that every single day, millions of smart, creative, hardworking people are going to go to work to solve problems, build amazing things, and create value in the world. That's the engine you're investing in.
All right, so we've covered the why, we have to beat inflation. We've covered the what, a simple, broad index fund. And now we get to the most important part of all, the how. Let's break down the exact practical actions you can take to make your very first investment. I'm going to make this as simple as possible. It's just 3 steps. That's it. Step 1, you need a place to do your investing. This is called a broker. Just do a quick search for a well-known, low-cost investment platform in your country. Step 2, open an account. It's pretty much like opening an online bank account these days, and you do not need a lot of money. Many places let you start with as little as $50 or $100. And finally, step 3. You log in, you search for a broad index fund like the S&P 500 we've been talking about, and you click buy. And that's it. Seriously. At that moment, you are officially an investor. So we end right back where we started. But now, hopefully with a totally new perspective. The choice you have to make isn't just about saving or investing. It's about deciding what you want your money to do. Do you want it to sit silently in an account, losing its power, its potential, a little bit more each year? Or do you want to put it to work, to let it own a piece of human progress and start building a real, secure future for yourself? That first step always feels like the hardest. But now you know. You know exactly how to take it.